Small business taxes, they're complex, they're stressful, and let's be honest, most of us would rather avoid them altogether. But what if I told you this video could save your business thousands of dollars and a ton of headaches? Stick around because today we're breaking down everything you need to know about small business taxes, from deductions to deadlines, so you can keep more money in your pocket and stay on the IRS's good side. In a nutshell, small business taxes include federal and state income taxes, payroll taxes, self-employment taxes, and much more. These funds are then used by federal, state, and local governments to fund everything from public schools and local roads to programs like Medicaid, Medicare, and Social Security. Small business owners that have made at least $400 in self-employment wages must report these earnings to the IRS by filing a tax return. In most cases, business earnings are taxed as personal income. Filing status, income tax withholding, and gross income determine if you need to file personal income taxes. Let's talk about the different taxes you might face as a small business owner. These include income taxes. Unless you operate a C Corp, your business taxes are going to be taxed as personal income. All income must be reported to the IRS, and personal tax rates are marginal and based on the amount of income you've earned. There are 7 income tax brackets that range from 10% to 37%. For corporations, a flat rate of 21% applies. In addition to your federal income tax return, you must also file a state return if you're doing business in a state where income taxes are collected. If you expect to owe at least $1,000 to the IRS, you must pay estimated taxes every quarter. If your business is a corporation, you'll need to pay quarterly taxes if you expect to owe at least $500. Estimated taxes are calculated on Form 1040-ES, which is submitted to the IRS along with your payment. Employment taxes are also known as payroll taxes, and if you have employees, you're required to pay these. Employment taxes include federal income tax, withheld from employee checks based on employee W-4s and the IRS withholding tables. Federal Insurance Contributions Act taxes, FICA taxes cover Social Security and Medicare. Employees pay 1.45% for Medicare, which employers must match. Employees pay a rate of 6.2% for Social Security, which also must be matched by the employer. Federal unemployment taxes are only paid by the employer and have a rate of 6% of the first $7,000 made by an employee. If you're located in a state that collects state income taxes, these must be withheld from paychecks and paid to the IRS. These supplemental wages can be taxed at a flat rate of 22% or using the more complicated aggregate method. If you're self-employed, you may have to pay self-employment taxes. If you made $400 or more, you made $108.28 or more working for a church or church-controlled organization. Self-employment taxes are reported on Schedule SE, which is filed with your federal income tax return. Excise taxes are required for the sale of certain products and services such as fuel, semi-trailers, and indoor tanning. These taxes are added to the cost of the product or service and are passed down to the customer. While business owners don't pay these taxes, they are required to submit them to the IRS each quarter. If you own commercial real estate, you'll be required to pay property taxes based on the property's assessed value. Other assets, such as vehicles used for your business, may also be subject to property tax. One of the most important things about filing your taxes is to meet IRS deadlines. Missing a deadline can lead to penalties and interest fees, so mark these dates on your calendar. April 15th, personal tax returns, self-employment taxes, and extensions. October 15th, tax returns if you filed an extension. Estimated quarterly taxes are due April 15th, June 15th, September 15th, and January 15th of the next year. If any of these dates fall on a weekend or holiday, the deadline is shifted to the next business day. Now, there are a few scenarios where filing an extension for your tax return makes sense. So consider an extension if you're missing tax information, you have inaccurate information, you're going to be overseas, or you have unexpected scheduling issues. To receive an extension, you'll need to file IRS Form 4868 if you're self-employed, a contractor, or a single-member LLC, or Form 7004 if you have a corporation, partnership, or multi-member LLC. Forms should be filed by April 15th. An extension does not extend the time you have to pay your taxes, so make sure you make a payment by the April 15th deadline to avoid penalties and interest. While there's nothing stopping you from doing your own taxes, there are several benefits to hiring an accountant. Accountants are up to date on the latest tax laws. They know what forms to file and how to complete them. They know important tax deadlines to help you avoid penalties and interest. While hiring an accountant does come at a cost, these experts can help you save money by finding important tax deductions and credits that apply to your business. You can also keep costs low by running reports, keeping your records updated, and having everything you need in advance before hiring a professional. All right, now we've reached the hard part, calculating your small business taxes. Understanding how the process works makes it all a little bit less intimidating. How you calculate your small business taxes depends on your business structure. C corporations are taxed at the corporate level. If dividends are paid, shareholders pay taxes on these dividends. This is known as double taxation, but will not apply if dividends are not paid. C corporations pay the corporate tax rate of 21% on the taxable income of the business. Taxable income is calculated by subtracting operating expenses from revenue. Gains, losses, credits, and deductions of the corporation are reported on Form 1120. If you're a shareholder, you'll report dividends as income using Schedule D. Sole proprietorships, partnerships, S corporations, and some LLCs are classified as pass-through entities. This means that revenue is passed through to the business owners and is filed as income on personal tax returns. As mentioned earlier in this video, personal income tax rates range from 10% to 37% and are based on taxable income. So how do you find your taxable income? You'll start by subtracting expenses from your gross income. This results in your adjusted gross income, or AGI. Deductions will be applied to this number to give you your taxable income. Your taxable income and your filing status will determine your tax rate, which you can find using the IRS's current year tax brackets. Marginal tax rates are used, so different rates apply to different increments of your taxable income. After completing your calculations, your business's income or losses will be reported on Schedule C, filed with Form 1040. Now that you know about small business taxes, it's time to file. The internet has made it easier than ever to access tax forms and resources to e-file your taxes. Here's how to file your return in 7 easy steps. The first step is to know your due dates. April 15th is the big one, but isn't the only date. Remember, dates will vary if you're filing quarterly taxes or you filed an extension. Failing to file and pay your taxes can add to your tax bill with penalties and fees, so make sure to file and pay on time. Wage garnishments and tax liens are also consequences of failing to file and pay your taxes. Keep communications open with the IRS and mark all important dates on your calendar. Don't wait until the 11th hour to prepare for tax season. Have the documents you need on hand to complete and file your taxes accurately. This includes things like personal and business information, financial reports, expense records, deduction records, and payroll records. Tax deductions are expenses that can be written off to lower your taxable income, which in turn lowers your tax liability. There are several money-saving deductions you may qualify to receive for expenses like home offices, commercial vehicles, employee wages, travel expenses, utilities, insurance. Make sure to review IRS resources to find out if you qualify for these or one of the many other deductions available. You can also consult with a CPA or tax expert to make sure you claim all eligible deductions for maximum savings. To learn more about deductions, check out our best tax deductions video linked in the description below. Claiming tax credits is another way to lower your tax liability. There are an abundance of credits available for small business owners, including research and development tax, R&D, the work opportunity tax credit, WTC, clean vehicle credits, and startup cost credits. Again, I'll emphasize that an accountant or tax professional can help you navigate tax credits to determine which apply to your business. Once you've gathered everything you need, it's time to calculate your taxes. Remember that the methods used to calculate your taxes will be based on your business's legal structure. Use your financial records to calculate income and expenses, then input your credits and deductions to determine how much you owe, or in some cases, how much the IRS owes you. Tax forms are available to download for free from the IRS website. Some of the most common tax forms for businesses include Form 1040, your individual income tax return, Schedule C, profit or loss from business, Form 1065, U.S. return of partnership income, Form 1120, U.S. corporation income tax return, Schedule SE, self-employment tax form 4562, amortization and depreciation, Schedule E is supplemental income and loss. Note that not all of these forms will be required for your business. If you're unsure of which forms you need to file, we recommend consulting with an accountant. While on the subject of accountants, it's a good idea at least to hire one to review your return. An accountant can spot potential mistakes in your return or identify deductions and credits that could lower the amount you owe the IRS. Once your return is complete, submit your forms to the IRS along with your payment, if applicable, by either e-filing your return or sending it by mail, and don't forget those deadlines. After filing your return, you may face an IRS tax audit. An audit is used to verify the accuracy of your return. In some cases, you may be audited if a potential error is found in your return. In other cases, an audit is completely random. With that being said, there is no way to completely avoid being audited by the IRS. The best course of action is to review your return with an accountant before submitting it to avoid potential mistakes. If you do end up being audited, the IRS will ask you to provide documentation to support information provided on your return, and that's why it's important important to keep good records for a minimum of 3 years following the submission of your return. As we wrap up this video, here are 3 final tips to keep in mind before heading into tax season. To avoid confusion and errors, open up a small business account to keep personal and business expenses separate. If you're not already, your business should be using one of 2 accounting methods. With cash basis, transactions are only recorded after a transaction is complete. With accrual accounting, transactions are recorded at the time they occur. While cash basis has tax advantages, accrual accounting offers benefits like higher accuracy and improved long-term cash flow tracking. Accounting software is ideal for tracking income and expenses, pulling financial records, and providing accurate information for your tax return. Some software even offers the added benefit of tax support. It's never too late to start these best practices. Even if you've already filed your return this year, keep these tips in mind for next tax season. And that's your ultimate guide to small business taxes. Remember, taxes aren't just about what you owe, they're about building a smarter and more profitable business. If you have any questions, drop them in the comments below. I'll see you in the next video, Mavericks.